So today we are going to talk about what is a shooting star candlestick pattern. So a shooting star candlestick pattern is the pattern that consists of two candles and usually forms at the top. However, this pattern can also appear in an uptrend. What is the function of the shooting star pattern in trading? Why does it have such a name? And what does this Japanese candlestick warn about on the price chart? You will find out answers to these and other questions in this video. You will also learn how to identify the shooting star pattern on the chart and apply it in trading in the financial markets. So, first let's start. What is a shooting star in trading? So it's a pattern with a small real body at the bottom of a price range and a long upper shadow that signals a likely peak on the chart. The classic shooting star does not have a lower shadow or is too short. The pattern got its name because of its shape. It has a long tail and a small body like a shooting star with a trail. So if you learn how to find this pattern on the chart, you will be able to correctly identify resistance levels and profitable entry points into the market. So what makes a shooting star more bearish? Unlike the evening star, the bearish shooting star is a weak trading signal and it does not always work out. Therefore, the pattern requires additional confirmation by other candlestick patterns. The color of the candle's body is not important. The pattern indicates that buyers tried to reach the top from the season's opening but failed. And the price, of course, returned to the opening range by the end of the session. That is, the candle's closing price is close to the opening price, which is also indicated by the long tail of the star. The appearance of a pattern at the top after the bulls attempt to break out the resistance level is a stronger signal for a bearish market reversal than a shooting star in an uptrend. But, however, the formation of a shooting star pattern on the rise may indicate an imminent short-term correction. So, what makes a shooting star more bullish? So a bullish shooting star is a single candlestick pattern that forms at the bottom. It is also called the inverted hammer. The pattern is formed during a downtrend and signals a possible reversal, as a result of which the price reaches a strong support level at which pending purchase orders have already been formed. So the color of the inverted hammer is also not important. The very formation of this figure is important. Candle's real body is in the lower price range and has a long upper wick. So shooting star candlestick pattern example of the Forex you have here on the chart. And so in this section you will see examples of the formation of a shooting star on the USD/CHF daily chart. So this chart shows that a strong bullish rally has begun. So the first shooting star pattern was formed. Then the price bounced off the lower border of the ascending channel with an impulse green candle. Further on the price chart, a hanging man reversal pattern appears, which warns market participants that the price has reached the top and could reverse soon. So, bull's weakening was confirmed by the formation of a shooting star. And so the next day, the price began to plummet. And so after two price reversal confirmations, a short trade can be entered with a target at the nearest support level where an inverted hammer has formed. And so in this place, it is necessary to take profit. So now, how to identify the shooting star pattern? And well, it is easy to spot a shooting star on the chart. This is a candle with a short body and a long wick in an uptrend or at a local top. So let's dig down into the very small steps, which is step one. We need to define the top. So first, it is important to determine the top of the instrument as a shooting star forms on it. If the pattern occurs in an uptrend, wait for a trend reversal and a breakout of the lower border of the uptrend. And so in this case, a price reversal is most likely. Step number two, defining the pattern. So the pattern consists of two candles, as I said. Below is below right here you have on the screen description of a shooting star. So the first candle must be bullish. The second candle can be either bullish or bearish. A feature of the pattern is the presence of a small shooting star gap after the previous candle. So the classic shooting star has a short body in the lower price range of the candle at the opening price level and a long upper shadow. We have step number 3, which is a breakout of the trend channel. So after determining the top and the pattern itself, it is necessary to wait for confirmation of a trend reversal. And so to break out of the lower border of the ascending channel and retest, confirm that the market turned bearish. So how to trade a shooting star candlestick chart pattern? So trading using a shooting star is not difficult if you act consistently. So let's consider a step-by-step guide again for trading shooting star candles on the H4 Euro USD chart. So first let's begin with the entry point. So when conducting a technical analysis of any asset, it is important to determine support and resistance. 80% of the success of the transaction depends on this, of course, right? So the chart shows that the price has been consolidating under the resistance for a long time, trying to break it out. However, the bulls weakened with each attempt and the bears became stronger. This is evidenced by the formation of several bearish patterns, including reversal patterns, for example, hanging man, shooting star, and marubozu. So during conservative trading, it is important to wait for the breakout of support, which is here the blue line, and to retest it to make sure that the price has reversed and the asset is controlled by sellers. So below this level, it is possible to open a short trade with a more risky trading strategy. It is possible to open trade even higher. So in the zone of formation of a shooting star and a hanging man. Now, of course, let's discuss the stop loss. So after technical analysis and opening a short trade, it is important, naturally, of course, to set a stop loss level. So using this order, traders can minimize the loss of funds. And so, according to risk management rules, stop loss, here it is the red dotted line, must be set above the broken out support level of 500 basis points above the position opening. So let's go next to the take profit. And it is necessary to take profit as soon as the price reaches the support level in this case. This chart shows that the price hit the support after the impulsive downward movement. So bullish engulfing and hammer reversal patterns began to form at this level. So then we have a shooting star candlestick versus the inverted hammer. So let's talk about the differences. And there are some kind of differences that the shooting star and an inverted hammer is that the first pattern forms at the top of the price chart and the second at the bottom near the support zone. So the color of the patterns does not matter, they can be either bearish or bullish. Only the pattern structure is important, namely the small body of the candle in the lower price range and the long upper shadow. So let's talk about the differences between shooting star and a hanging man. And so the main difference between hanging man and a shooting star is that the first pattern has a small body in the upper price range and a long lower shadow, while the second pattern has a small body in the lower part of the price range with a long shadow up. So in other words, the hangman is an inverted shooting star. Hanging man is a reversal pattern, so it has a strong signal that a shooting star and does not require price reversal confirmation. Thus, a hanging man is an uptrend signals an imminent price reversal, while a shooting star in a bullish trend requires additional confirmation by such patterns as hanging man, bearish engulfing, dark cloud cover, evening star, etc. So, now let's discuss, of course, best shooting star candlestick strategies. So there are several ways to trade a shooting star candlestick pattern, and let's take a look at the most effective strategies. So strategy number 1, trading with confirmation. So this trading strategy is based on shooting star confirmation with the other candlestick patterns and candlestick analysis indicators. So let's take a look at the GBP CHF example. The H4 chart right here shows that the price cannot break out the resistance and forms several bearish patterns. In addition, the MACD, or whatever you want to call it, indicator has begun to move into the negative zone. So the first signal for a price reversal is a shooting star pattern. And then the hanging man, the evening star, and another shooting star are formed. So the transition of the MACD into the negative zone and the impulsive breakout of the support level served as additional confirmation. So it is worth opening a short trade after the price has broken out the support. And so, in this case, set a stop loss above the broken out level by 400 to 500 basis points from the entry point. And profits are fixed at the next support level, where bullish reversal hammer and inverted hammer patterns began to form. Thus, it was possible to earn more than 3,700 net. Thus, it was possible to earn more than 3,700 net profit points from this transaction that you can see on a screenshot. Strategy number 2, intraday pattern trading. So the essence of this strategy is the opening and closing of trades during intraday trading. Trading is carried out on lower timeframes during the price movement from support to resistance and back or using chart patterns. So let us take a look at this 15-minute US crude chart. So this screen shows the consolidation of the asset in the range of 55.57 to 50. This screenshot shows the consolidation of the asset in the range of 85.57 to 87.11. So the price moves from support to resistance naturally. A trader could open 6 buy and sell trades. It was possible to open the first short position when several shooting star patterns appeared with a target at the support level, from which the price bounced up. And so, in this case, set the stop loss above the resistance when opening a short trade and below the support when entering a buy trade. And so let's take a look at the 5th short trade. Here the price broke out the resistance, but the bulls failed to rise higher. Then another shooting star pattern was formed, and it should be emphasized that when the resistance was broken out, the price successfully tested this level and headed up. Numerous buy orders opened near support. A bullish hammer and an inverted hammer are forming there as well. And so, this trading strategy without confirmation on lower timeframes is riskier than the first. However, you will be able to make a profit very quicker. So, thus, according to this US crude trading strategy, it was possible to get a total profit of 9,252 basis points, or about $92 in net profit from minimum trades of 0.01 lots per trading session. And so, let's talk about key tips about shooting. For shooting star candlestick pattern. So, when detecting a shooting star, first of all, it is important to correctly determine the support and resistance levels. The pattern has a strong signal at the top. Within an uptrend, it can give false signals. So pay attention to the place where the figure is formed. As I said previously, the color of the candle is not that important, but a red bearish shooting star candle is strongly bearish, of course. So it has the meaning, but in certain situation. It has the importance in certain situation. Okay, when trading this pattern, it is important to confirm that the signal with other candle patterns or technical indicators. And so the next is to set a stop loss according to risk management rules to avoid unnecessary losses. And so the absence of a lower wick is a sign of a strong signal. This classic shooting star is very rare, but the price is more likely to decline after its appearance. So, summing things up, The shooting star is one of the key patterns in candlestick analysis. It warns traders about an imminent reversal of the uptrend, and trading this candlestick allows traders to make money during short-term trading. So for successful Forex trading, it is important to understand how shooting star form and be able to use this pattern as it often appears in the chart. The key point is that this candlestick needs confirmation by other patterns and indicators. And so the quality of trading and potential profit depends on competent analysis, the correct identification of the trend, and the psychology of market participants. So guys, I hope you like this very quick guide on a shooting star candlestick pattern. As always, if you like this one, leave a like, subscribe to the channel, and I'll see you in the next tutorial video. So take care, bye bye.